Good evening, everyone. Welcome to the webinar organized by the Banking, Financial Services and Insurance Board of the Institute of Cost Accountants of India today on the topic anti-money laundering. And we are really honored and privileged to have as our speakers today CMA Shangita Basu Halabi Madam. She is the Senior Director Risk Compliance and ESG. CMA Siva Rao sir, he is the Assistant General Manager ICICI Bank. We welcome you, sir. We welcome you, madam. From the institute, we have CMA Chitranjan Chattopadhyay, sir. He is the chairman of the BFSIB board of the Institute of Cost Accountants of India. CMA Shankar Paniker, sir. He is the chairman SIRC of the Institute of Cost Accountants of India. Shri Shamul Ghosh Ray, sir. He is the consultant of our BFSI board. CMA Shubhra Michael Gomsa, he is the director and HOD of the BFSI board. CMA Dibbendu Roy, he is the additional director of the Institute of Cost Accountants of India. And Shri Bhavesh Kumar Sinha, sir, he is the deputy director
Yes.
of the Institute of Cost Accountants of India. So let us start this. We welcome all of you. We welcome all of you, madam, sir. Heartily welcoming all of you. So just before we start, we are playing the Institute anthem first, and then we will start off.
Asatu ma sadgamaya tamsu ma jyotirgamaya mrityurmamritam gamaya asatu ma sadgamaya tamsu ma jyotirgamaya mrityurmamritam gamaya asatu ma sadgamaya tamasu ma jyotirgamaya mrityurmamritam gamaya.
So now I would request our chairman, sir, CMA Chitranjan Chattopadhyay, sir, for the welcome address and introduction of the theme. Sir, over to you.
Thank you, Indakshi. Very good evening to you all. Today, I have to speak from airport, Kozhikode airport, because this program I am attending with my, extreme affection to all my the speakers who are here. Madam Sangeeta Halabi, who came to Kolkata all the way from Dubai. And that time we had some discussions, and I'm really thankful that she has accepted our invitations for speaking on anti-money laundering. And another one of our members, Siva Rao, who happens to be also another speaker whom we nominated in our SAFA anti-money laundering committee, because being a member of the anti-money laundering committee in SAFA, I thought that our members who are having profuse knowledge, they should also disseminate their knowledge before the SAFA countries. And we have with us our Shamal Ghoshrai, one of a very veteran banker, having profuse experience in the banking sector, especially in treasury. And this, I think, today's session he will be looking for his some valuable address here. And we have with us, most important, that although our chairman H. Padmanabhan, CMA H. Padmanabhan, is the chairman of the CAT and AT board. Today, there is the historical first national CAT student convention being taken place in Calicut, for which I have come here in Calicut. So I understand that he is very busy, and he's a darling for all students. So students are really having their many activities, quiz competitions, even they are doing for many sort of, and at the end of the program there will be a DJ. So naturally they are really enjoying. But we are really fortunate that I am myself having accompaniment of CMA Shankar Paniker, who is with me, who is the chairman of the Southern India Region Council of the Southern India Region Council chairman, and my HODs are here. My team members are here. Dibyendu Roy, perhaps he is also here. So actually, this particular evening, I think one of the first of its kind from the BFSI board that we are launching this program on anti-money laundering. And I think today's two speakers are really they are having the knowledge, and I think that will be definite. They will be satisfying our thirst. They will be quenching our thirst, and in the at the end of the day, some takeaways will be helpful for all our professionals who are actually they have joined in this program. Many people have got their many queries. I request all the attendees here, those who are attending and will be attending. I know due course of time attendance will be increasing like anything. I request everybody to please ask their questions in the chat box, and that would be definitely addressed by our two respected speakers. As you know, that this anti-money laundering issue is a worldwide issue. It's not a country's issue; it's a worldwide issue. And Indian International Monetary Fund also they have actually defined in the this they are fighting against money laundering and financing of terrorism, and IMA policy papers are there. So anti-money laundering is actually an underlining primary profit-making crime such as corruption, drug trafficking, market manipulation, fraud, tax evasions, along with the intent to conceal the proceeds of the crime or to further the criminal enterprise. And these activities generate financial flows that involve the diversion of resources away from economically and socially productive uses. And these diversions can have negative impacts on the financial sector and external stability of member states. Friends, today's program is important. Why? Because the Reserve Bank of India has come out with a discussion paper for which they have sought suggestions both on the market economy and as also credit risk. Expected credit loss mechanism is very much on the anvil. So, and market risk is also very important. All these things, all these issues, these are all having interconnectivity. So naturally, the knowledge we will be today will be having, that will be definitely a, I think it would be helping us in future to take our right directions as a professional for the cause of growth of the nation and the society itself. Because as a CMA, we are not only serving for the only for our clients, but also we are having the ostensible duty to serve the country and country's interests. Because in G20, our Honorable Prime Minister Narendra Das Modi ji is a president, and under his presidential term, it's our responsibility for the financial stability of the country. And for that reason also, I think this today's program will be another game changer for our profession. Many members will be listening, and they will be taking a real call of their professional life, how to go with these particular anti-money laundering issues. With this, I will be not taking much of time because we are all eager to listen from our speakers. But before that, I request our chairman of the Southern Indian Council, CMA Shankar Paniker, who himself is a very knowledgeable personality and having the experience in the professional domain area. He is also having the knowledge in the law also. Basically, he deals with the as a in the high courts and other judicial parlor. So naturally, I would be listening from him, and I request him to give a special address on this occasion. Over to Sri Shankar Paniker.
I remove this.
No.
Thank you, Chitoda, for this amazing opportunity. For me, everything is a, you never know when you should be acute, when you should be, ready for a sharing of information. Thank you, Chitoda. It's an experience for me to deliver a session on the airport. Normally, we prepare and have a safe, the comforts of office or home. We do this. But then once Chitoda has introduced this theme, we hardly have anything more to say. But then, as we have seen in football matches, substitutes come and play and kick, get some goals and go and take all the credit. So let me also try to, show my, how strong is my Jupiter now. Friends, if you look at being a banker and my learned speakers on the e-dice is also bankers. When it comes to anti-money laundering, with the unconditional support of Reserve Bank of India, the bank has been empowered to take any steps to curb this. If you look at the objective of anti money laundering, I will just quickly, ever since I started into the law profession, I don't believe in my memory, so I'll just read the first preamble of the anti money laundering. Is an act to prevent, very strong words, to prevent money laundering and to provide for confiscation, very clear, confiscation confiscation of the property derived from. So very clear, once you understand there is some confiscated, it is derived from, confiscation of the property derived from or involved in. So it's very simple. You can first confiscate and then only you need to speak whether it is, you need to prove involved in money laundering and for matters connected therewith. Look at the spread, it's very macro definition for the act. Now another thing which is happening is, I've always observed when it comes to insolvency and bankruptcy code has a section called section 238, which says that it has got an overriding provision of all the law for the time being in force, unless otherwise there is. But it's very interesting to share this information that when it comes to Anti-Money Laundering Act and IBC, Supreme Court is yet to decide which is going to prevail. Therefore, that is the importance of anti-money laundering in this country. In one of the cases I'm handling, even though there was a moratorium under section 14 of IBC, it's very clear there's a PML prevails over it. So therefore, that is the important. And as a finance professional, let me convey without any qualms or any provisions or any qualifications. Wherever there is a finance professional, an ethical finance professional, the chances of you taking deviations or chances of the company taking deviations are very low, because we have been taught to follow ethical practices, and we'll be guiding the company to take ethical practices. Now, in the case of any of the cases referred to IBC, every story will have every case will have some story to tell. Maybe somebody have siphoned the matter, somebody have taken some story. So according to me, the role of a finance professional or cost and management accountant need to handhold the management or decision makers to show that, look, you cannot do this for convenience, you cannot do this act is very strong, be better careful. So this is the essence which I have to just share as a substitute for the match. And thank you, and I wish wonderful learning session. Thank you, Chitrada, especially for this opportunity. Thank you.
Thank you. Thank you, Mr. Paniker, for your very brief but this is a thought-provoking address, keeping in mind the IBC and the AML. Friends, I just want to mention before you that on 27th we have got an excellent program on IBC, a case study which would be addressed by Madam Chitrali Goswami, who happens to be the CGM of ONGC. Very interesting session you'll be having. And although Dr. J.D. Sharma, that Managing Director of IPA, CMA IPA, you will be addressing. You can join. Kindly register your name for 27th. This should be in hybrid mode and first come first serve basis, physical mode. Only 50 candidates may be joining, but it will be definitely you'll be enjoying sitting at home. With this, I hand over the session to Indrakshi Bhattacharya.
Thank you, our chairman, sir, Shankar Paniker, sir, for such inspirational address. Now, requesting now our consultant, sir, Sri Shamul Ghoshre, sir, for his address. Sir, you're in mute. Sir, please unmute.
Am I audible now?
Yes.
Oh, good evening, Indrakshi. Thank you very much. And Mr. Chatterjee, Chairman of BFSIB, Mr. Paniker, and today's speaker, Sangeeta, as well as Shiva Rao. Welcome to this program of anti-money laundering, which is a very interesting topic as far as today is concerned. It's not only today. We have been handling it for the last 10, 15 years because frauds and all such kind of things, the origin of the money needs to be known, how it is originating and where it's originating. That is very much important. And as I already said, that money laundering needs to be curbed. The two speakers have already said that money laundering needs to be curbed. And as a member of the international financial system, our country is also very serious and committed to curbing this process of money laundering and all these things. Moreover, international investment flows do not come to those countries which have not.
Mr. Manager Audrey and Mr. Prince Thomas Odekri, Mr. Prince Thomas Odekri, of Delhi.
Requesting everyone to please keep in mute condition.
International investment flows do not happen in those countries which have not implemented the measures for prevention of money laundering. So the government of India has enacted in the year 2002 Prevention of Money Laundering Act. And as Mr. Paniker also briefed it, I also want to say something about this act, which is, according to this act, any person who either directly or indirectly attempts to indulge in, or knowingly assists, or unknowingly is a party, or is actually involved in any process or activity connected with the process of crime and projected it as untainted property, shall be guilty of offense of money laundering. That is in brief the act which Mr. Paniker has also just said. So the objectives of Prevention of Money Laundering Act is to, just to be briefly, I would like to say that enable banks to know and understand the customers and their financial dealings better, which in turn would help the bank to manage risk prudently, put in place appropriate controls for detection and reporting of suspicious activities in accordance with acceptable laws and laid down procedures. Thirdly, comply with applicable laws and regulatory guidelines. And last but not least is take necessary steps to ensure that the bank staff is adequately trained and in the above required procedures. And money laundering have 3 stages, which I think our speakers should also explain it in more detail, is that placement, layering, and mitigation. These are the 3 stages. First stage comes, it means physical disposal of proceeds of criminal activities. That is the placement. And layering, it means separation of illicit proceeds from their source by creating complex layers of financial transactions, thereby avoiding audit trail and providing anonymity to the source of funds. This is where the auditor's role needs to come, and the auditor's position is very, very important. And third is integration. How the finance place use the monies which are just brought or invested in legitimate economic activities as normal funds. So illegitimate money is now given a shape of legitimacy and then invested in the all economic activity. So what is the role of banks? I'll just say 1 or 2 words about the role of the banks. Is that, as the proverb says, prevention is better than cure. Banks are required to initiate steps to prevent the money laundering at the first stage itself, which means do not accept funds the sources of which are not satisfactorily explained. This can be done only if banks know the financial details of the customers. Banks are required to know the actual identity of the customers and the financial background and the likely volume of transactions in the account before accepting him as a customer, such that transactions can be monitored to verify that the bank account is not used for illegal transactions. So KYC plays a big role here, both in deposits and loan transactions. With this, I hand over the mic to Indrakshi, and I look forward to hearing to today's speakers, Madam Sangeeta as well as Shivarao, for their contributions. Thank you.
Thank you, sir. So,
Thank you, Mr. Ghosh. You have given a very brief insight. Let me tell all my participants over here that yes, being an institute of national importance, we have to continuously upgrade the knowledge because many things are evolving, many cases are being found globally, and today I'm really fortunate that from the Indian counterpart, Mr. Rao is there, and from the other part of the globe in the SAFA countries, Sangeeta is here. I think Sangeeta will also touch upon certain case studies, and I request Mr. Rao also to touch upon certain issues, case studies, to make it more lively so that really we can understand that how this anti-money laundering issue, as a CMA professional, we can really help the government help the country, help the client to have a very, value-based their transactions and value-based in the commerce and trade. With this, I hand over the session to Indra Kiwataja.
Thank you, Shamal Ghosh sir. So we will now listen from our eminent speakers now. Before that, I just have the privilege of introducing them. CMA Sangeeta Basu Halabi Madam. She is a member of the Institute of Cost Accountants of India. She is a diploma in Islamic Finance, a diploma in Data Science from IBM. Over 15 years, she has specialized experience in risk management advisory services, anti-money laundering compliance review, and establishment of anti-money laundering compliance framework. She has financial and commercial due diligence and business valuation. She has experience in governance and compliance, gap analysis, and preparing policy and procedure manuals. She is the founder of Quantum Analytics Pro FZ LLC. Madam has 15 years of experience in anti-money laundering compliance review. She has worked for PwC at both London and Qatar offices for 2.5 years, followed by Rodel Middle East for 4 years as Business Advisory Director and Russell Bedford for 4 years as Management Consultancy Director. Her major achievements include the establishment of the first Sharia Bank in the Shanghai Free Zone in association with the World Bank and the establishment of several banks and finance companies in Qatar Financial Center. She has conducted an anti-money laundering compliance review and training for several leading exchanges, investment companies, and insurance companies in Qatar and UAE, namely Al Zaman Exchange, Travelex, Gulf Exchange, and many more. She is also an advisor and trainer of FATCA and CRS and ESG investing. We welcome you, madam. So we have with us Shiva Rao, sir. Sir, he is a seasoned professional with more than 20 years of cross-cultural and extensive experience in spearheading financial accounting and reporting at MIS with Oracle e-business suite implementation experience. He is currently associated with the India's largest private sector bank as the Assistant General Manager. He has been associated with ING Vaishya Bank from the year 2000 till November 2012 in various reputed positions, and from November 2012 he has been associated with ICICI Bank as the Assistant General Manager, and he is the member of the Institute of Cost Accountants of India, and he has completed his Bachelor of Commerce from Nagarjuna University. So we welcome you, sir. We welcome you, madam. It's really an honor and privilege, sir, with both of you, sir and madam, to have with us today. So requesting our speakers now for their presentations.
Yeah, thank you.
Thank
Yeah,
you.
Sangeeta.
Well, yes. Good evening, Chairman of BFSI, respected council members, the committee of BFSI, friends and fellow colleagues. Thank you very much for giving us an opportunity to conduct this session.
Madam Sangeeta, please unmute your video kindly.
Well, because once again, when I will share the screen, maybe I will mute the video.
That's okay. That's okay.
So,
But
as we know that money laundering crimes are increasing day by day, and most of the countries and the central banks are imposing stricter regulations to combat money laundering. I believe that this session will be a kind of a value addition to our respective members, and I hope that we will make it a little bit more interesting. So over to Mr. Shiva Rao, and I will also start sharing the screen. Over to Mr. Rao.
Yeah, thank you, madam. Good evening, Chairman, sir, and all other respected members. Thank you for giving an opportunity to share our knowledge on the FATF, OFAC, and money laundering issues. Definitely, this session is going to be helpful for all the institute members. Without delay much, we will go to the presentation.
Okay. So let's jump into the presentation. Okay. Let us see the window. Where we are now. Can you see? Let us see.
It's not yet visible.
Okay, just let me check.
Madam, you had shared the presentation. You just
Yeah, I think if you can open the presentation, that will be fair enough.
Shiva Rao sir, can you please open the presentation, sir? Because it will be easier to you if you run the
Yeah,
presentation.
okay, I'll open.
Yeah. Any one of you can, if you can just open, then maybe we can.
You're not able to open, Sangeeta ji?
I think the screen is. Can we share the screen? Mr. Shivarao, do you have the presentation? I think you have the presentation. I don't know why I'm unable to share it. Yesterday it was working perfectly. I think I can do it now. Can you see? Hello?
Yes,
Hello,
madam.
can
Yes.
you?
Yes.
Oh,
Okay.
fantastic. So we are done. So
You go in a slide
let
mode. Slide mode, you do it. Slide mode.
yeah, I will go to the slideshow. So I think now everybody can see the presentation, right?
Yes, it's available now. Okay, fine.
Okay, fantastic. So let's jumpstart. Money laundering is becoming a well-known concept which is increasingly talked about and referenced within mainstream media, particularly when people see large privately owned businesses, high-class cars, or luxury properties. You may even hear people saying all this wealth resulted from money laundering. If there is a huge revenue from a business, but that type of business does not normally generate that amount of money, then money laundering could be involved.
10 minutes will be unavailable.
For example, when there are luxurious shops selling inexpensive goods such as sweets or chocolates, which might not cover the expenses of running a shop, then red flags are raised with regards to money laundering. Now, this money, before money laundering crime happens, there are certain elements must be present. So, what are these elements? There must be an original crime, there must be financial or physical proceeds, generated from that original crime. There is a need to hide or conceal that dirty proceeds. And last but not the least, there must be a knowledge or reasonable grounds to suspect the criminal source of the fund. So, at the beginning of every money laundering case, there is a predicate crime which generates proceeds, which in turn need to be laundered. The criminal offense is considered a key element within the concept of money laundering. But other considerations could include which country or state the crime took place in. Is this a criminal act in the country or state where the crime occurred? Is this a criminal act in the country or state which received the money or proceeds generated by the crime? For example, the sale of alcohol in most countries around the world is permitted and therefore not illegal. However, in some Muslim countries, for example, Saudi Arabia or Qatar, it may be prohibited, and thus alcohol trafficking and by extension, the laundering of the proceeds of alcohol trafficking is a crime punishable by law. Now, let us go to what are the different stages of money laundering and what happens in these different stages. Money laundering involves taking criminal proceeds and hiding their illegal sources in order to use the funds to perform legal or illegal activities. Simply put, money laundering is the process of making dirty money look clean. Now over to Mr. Shiva Rao. He will explain more in detail the different stages of money laundering.
Yeah, thank you, madam. As madam already explained that there are 3 stages of money laundering: placement, layering, and integration. I'll just give an example from a layman's perspective. What is laundering? Laundering is converting the dirty into clean. We also do a lot of laundry day-to-day basis. What is that we do? Our clothes. We give to laundryman. He will wash it and he will make the dirty cloth to the clean. So the money laundering is also a process of making the dirty money into the clean. So how we will make? Like in our laundry, the clothes laundry, what we do, use some detergents to clean the dirt and make that cloth is very clear. So that way, there are 3 stages generally followed by the people to make the dirty money into white. That 3 stages are placement, layering, integration. Here also I take one very layman example. Every one of us would have done this in the childhood days. Generally, what will happen in the childhood days? Otherwise, you would have observed one of your friends has done this. If any boy steals one of his friend book, what he will do? First, he will place that book somewhere else without noticing. Means he will take that book, keep it home, and keep that book for some days. Then layering, what he will do, he will remove that whatever the cover that particular book is having. Then he will put his own cover, and so that that original student will not even see that book, he will not understand that is his book. Then integration, he will bring that book to his bag, he will mix along with other books so that it will not be noticed. So same way, if the madam, next slide.
Okay,
Madam,
so let's
next slide. Yeah. So what I explained, the placement, layering, and integration. So what is that criminals will do, that money laundering funds? First, whatever the money earned from the illegal activities, they try to keep that money, they try to place that money in an unnoticed way. And these are the few examples we try to give here. how that money is going to be placed in a various places. So one of the best example is making that money into very small amounts and placing it in various financial institutions. So that if somebody places 100 crores of deposit in a particular, say for example, in a particular bank, it will definitely goes to the noticeable amount. And nowadays the banking industry is undergone a lot of changes and regulations. So there are a lot of reports are going to the Reserve Bank of India or central regulators about the high value deposits, huge any cash deposits, those things. That's why the people will try to put place the deposits, place the money into a small unnoticeable amounts. Then the second stage of the money laundering is layering. Layering. In our previous example, I explained that a boy remove that existing cover of the textbook or notebook, he will put his own cover. He will layer it. The same way, how this money can be layered. These are the few examples we have given. One of the best best ways you do lot of movement of that cash or deposits or that financial activities in crisscross way. Any so that any regulators or any financial institutions will be finding it very difficult to find out the source, original source. Means, for example, place your deposits immediately, after some time buy bonds, mature that bonds, again take the proceeds, buy equity, again sell that equity, take that proceeds, again buy real estate, and sell that real estate, do n number of transactions. So after certain period of time, any regulators or enforcement direct agencies will find very difficult to find the source of the funds. That is what layering. Then integration. After doing a certain number of movements, once that person ensures that okay, now it is a very difficult to find out the source of these funds, then he will bring that money into the mainstream of the economy. So he will purchase any of assets, he can get into the financial ventures, he will invest into the companies. So that way, I'm telling very briefly, these are the three stages where any person will do the money laundering. Yeah, madam. Next slide.
I would like to add a small point here. You are seeing three different stages, but actually in the integration stage, the money launderers, they actually start getting benefits from money laundering. So it is our responsibility to curb or to stop money laundering. The best time is the placement stage, which money laundering can easily be detected. Even at layering stage, also, although money launderers use a lot of colors in order to hide the source and ultimate destination of the funds, but most of the banks, financial institutions, they have a very well robust transaction monitoring system which is AI enabled. So it is somewhat much easier to identify that something wrong is going on in a client's or customer's account. Integration stage is really very difficult to identify unless there is a big difference between a person's income and his wealth, or a business, their capacity to do business or generate revenue, and the huge amount of capital those companies they have. So if there is this kind of disparities, definitely there is a red flag that something is not going wrong, or something is not going right with those kind of individuals or companies. Now let's move to the next side, that what are these illegal activities? As we can say, any kind of illegal activities can generate dirty money. So Mr. Shivara, do you want to add any input on it?
Yeah, see, basically any person, when money launderers, when they want to do money laundering, if they are earning the money from the illegal activities. As Sangeeta madam in the initial stages, she explained, different countries are having a different kind of a bans. So if any person is earning the incomes from this kind of activities, he cannot disclose that income to the governments, the local governments, and he cannot pay the tax. Otherwise, if the government's allowing the person to pay the taxes on the illegal money, this money laundering is not at all required. See, for example, if somebody is doing a selling of narcotics in India, that is banned. Narcotics selling and purchasing is banned in India by the regulatory agencies. So if the government allows him to pay the taxes, he will pay. But the moment he declares that he is earning the income from the sale of narcotics, immediately he will get arrested. So he cannot disclose, and he cannot make that dirty money into the clean. Therefore, these kind of examples we are given. So these kind of illegal activities are the source of that source point of the money laundering. Yeah, madam.
Yeah. Now we will talk about that why we are today to discuss this anti-money laundering and what is our role as a institution and also as a cost accountant profession. What are our roles and responsibilities? The first thing is we must understand what are the economic and social consequences of this dirty money which is pouring into the financial system. Let's Mr. Shivarao talk a little bit, then I will share with you a very interesting real case study. Over to Mr. Rao.
Yeah. So the consequences, social consequences of money laundering is basically that you already explained that we have two international regulatory agencies. One is FATF and the another one is the OFAC. So the country, if any country allows the money laundering, the country will face the financial international sanctions from these two regulatory agencies as well as from the member countries. If any sanctions placed, the reputation of the country will get impacted, as well as the country may face a lot of sanctions in terms of any supply of goods or in terms of trade. Anything can happen that member countries can take a call. Ultimately, that will be the detrimental to the interest of the, say for example, if you take Indian citizens or any country citizens, if the country is going for toss, automatically the entire country members will get suffer. So people think that, okay, somebody is doing the money laundering, what is that I'm going to be impacted? No, that is not the way. The entire country will get suffer. The moment country gets suffer, automatically the residents who are residing in that country by default will be suffered. Yes, madam.
Yeah, I will discuss with you now that how a reputation of any institution get affected if they don't have a robust anti-money laundering program. This case was originally investigated by FinCEN, which is Financial Crime Enforcement Network of United States of America. The case goes like this. From 2003 to 2008, Thomas Eider, a gentleman called Thomas Eider, served as the Chief Compliance Officer for MoneyGram, a money service business specializing in money transfers. As part of his responsibilities, Mr. Haider was responsible for ensuring that MoneyGram had effective AML CFT program that requires timely reporting of suspicious transactions. He was also in charge of MoneyGram's fraud department. During that time, there were thousands of complaints placed by customers who reported that they were victims of lottery or prepayment fraud and instructed to remit money to fraudsters via MoneyGram agents in the United States and Canada. Although receiving a wealth of information from complainants, Mr. Haider and MoneyGram fraud department did not conduct any investigation of the complaints or the outlets from where the complaints were generated. An investigation would have allowed Mr. Haider to suspend or terminate any agent participating in the illegal activity. According to a December 2014 FinCEN assessment of civil penalty, Mr. Haider failed to implement an appropriate AML program, failed to conduct effective audits or terminate known high-risk agents. As a result of FinCEN's investigation, Mr. Haider was removed from his employment at MoneyGram, and MoneyGram was assessed US $1 million civil money penalty in 2014. So You can imagine that what kind of reputational risk an institute can invite if they don't have proper anti-money laundering framework. So the only remedy is establish a proper, sound and robust anti-money laundering and know your customers procedures. Let's go to the next slide, which is a very interesting, and I am going to discuss this now. You can see the two different crimes, money laundering and terrorist financing. Now the question will come, these two are two different crimes. Why we are clubbing them together? And if you see that many rules and regulations, in the headline of the regulations, it is written AML CFT. Although these two crimes are two different kind of crimes, two different set of actors are involved, but there are certain similarities. For that reason, they are clubbed together. What are these similarities? Both money launderers and those who are in terrorist financing, they use electronic funds transfer. And we will discuss it when we will discuss the case of 9/11 attack. Also, both money launderers and terrorist financiers, they use underground banking, which is popularly known everywhere as a hawala transaction. They do currency smuggling and they abuse charitable organizations, they abuse non-profit organizations. Now doing money laundering through banking system is not so easy. Now the popular way money launderers or terrorist financiers, they move their funds are through money service businesses, through crowdfunding, which is very vulnerable, and charities and non-profit organizations. Now let's see what are the differences. The purpose of money laundering is to make the money clean, and the source of funds is always dirty, because if the money is clean, you don't need to launder it. The purpose of terrorist financing is ideology driven or some political motive driven. The source of funds is not necessarily dirty, because when a terrorist financiers, they use a charity, normally they ask for the donations and they show a certain kind of cost. The money is money poured in because we as a donors, we feel that yeah, we should contribute to that cause, but we don't know where this money is going. So not necessarily the source of fund is dirty. Money laundering, of course, involves large sums. For terrorist financing, big sum is not really needed. Even we can do any terrorist act with a small money, which we will discuss later in the case study. Greed is the main thing in money laundering, and for terrorist financing, it is definitely ideology driven.
So
How many
here
of you
just
9/11 attack?
yeah. In the previous slide, just would like to add one point.
Sure, please
Members
go ahead.
members would have observed that recently in the previous week, the Reserve Bank of India has issued one circular asking with related to the donations. In India, we have thousands of NGOs, organizations, wherein they are getting the funds from the international sources. So the Reserve Bank of India has brought one new requirement that all these donations only should go to the particular account, donations account in the State Bank of India, only main branch at Delhi. Means no banks are allowed to allow that inward remittances with purpose code donations. Means, for example, if somebody is sending their money to me in the form of donation, I'm having an account in for example, any public sector bank, say, or private sector bank. That I'm having account, if that funds is received, they will not credit that account to my account. They will not credit that amount to my account. That should go to only state. I need to maintain one particular account in State Bank of India, main branch Delhi, and they only will verify. After that, money will be credited to our accounts. In addition to this, they brought one revolutionary changes. Every day, on a daily basis, the State Bank of India has to report all money that is flowing to India from very international sources, many international sources, to the Home Ministry Affairs, Ministry of Home Affairs, so that they want to monitor. As Sangeeta explained, that in the form of NGOs, a lot of money is flowing to India, and that money is getting distributed in a small amounts to finance that terrorism activities in any other countries, not only in India, so any other countries. So to monitor that money, whatever it is flowing from international sources, this kind of a mandatory requirements were brought. Yeah, madam.
Yes. Now, how many of you still remember the 9/11 attack? I think now the memory is flowing in. I will discuss now that how these hijackers abused financial system to mobilize money to conduct such a big scale terrorist attack. And from that attack, FATF added another 10 recommendations, which is clubbed with money laundering as terrorist financing recommendation. So let's talk about how the money was mobilized. The September 11 hijackers used US and foreign financial institutions to hold, move, and retrieve their money. They deposited money into US accounts primarily by wire transfers and deposits of cash or travelers' checks brought from overseas. Several of them kept funds in foreign accounts that they accessed in the United States through ATM and credit card transactions. Through reconstruction of available financial information, the US Internal Revenue Service and the US Federal Bureau of Investigation established how the hijackers responsible for the September 11 attacks received their money and how the money was moved into and out of their accounts. The 19 hijackers opened 24 domestic bank accounts at four different banks. Now observe, accounts were opened with cash or cash equivalents in average amount of 3,000 to 5,000 US dollars. So I told before, the terrorist financing doesn't need big amount. Identification used to open the accounts were visas issued through foreign governments. There is no suspicion. Let's dig down further. Some of the accounts were joint accounts. Okay. Addresses used usually were not permanent addresses, but rather were mailboxes and were changed frequently. Here, the problem starts. The hijackers often use the same address and telephone numbers on the accounts. This is, of course, a red flag. The hijackers made numerous attempts to withdraw cash in excess of the limits of the debit card. Numerous balance inquiries were made. After a deposit was made, withdrawals occurred immediately. That means these hijackers were using the account as a funnel account. Once the money is in, they were immediately taking it out. Overall transactions were always below reporting requirements. So you can imagine that how hijackers and terrorist financiers used banking channel to conduct such kind of action. Now we will talk about a little bit about what are the red flags of terrorist financing. For example, the parties to the transactions, transactions are happening between two countries. They are known as a supporter of terrorism or drug traffickers. Use of false identification. This happens always, even while doing some able audit, we have seen people are using false identification. Although false identification is not always associated with terrorist financing, but of course, terrorists never use their right name. Do you know the real name of Abu Bakr al-Baghdadi, who is the supremo of ISIS? Well, his real name is Ibrahim Awad Ibrahim al-Badri. So you can imagine terrorists will never come up with their real name. If the person's name is in the UN sanction list or any sanction list, of course, he might be a terrorist. When the beneficial owners of the account cannot be identified. I have seen one case like that. The case goes like this. It was a real case. When I was in Qatar in one exchange, I have noticed one thing. Many Filipinos, they were sending money to Philippines to one person. And every time when they were sending money, they're writing either my husband, my brother, my father, my cousin's cousin, like that. I started inquiring that can you take out this particular transaction list at least for 3 months? Let us check what is going on. And every time the amount which was going to the Philippines was very less, not more than 2 to 500 Qatari riyals. So no reporting requirement or currency reporting requirement is there. When they made an analysis, I said that please check who is the beneficial owner, why so many people is sending to this person. They said, then I asked them, did you make a sanction screening of this beneficial owner? They said, it is a small amount and we didn't feel that it is a need to do a sanction screening. I said, please do a sanction screening and if possible, raise a suspicious transaction report to the FIU. After a few months, they came back and they said that, madam, you were right, because this fellow, the beneficial owner, the beneficiary was actually running a betting ring. He was doing rooster fighting. And rooster fighting is illegal both in Qatar and also in Philippines. So if such kind of situation happens, please be extra vigilant. Abuse of non-profit organization is very, very profitable channel for money launderers. So these are certain behavioral indications. When we look at the financial side, we see if the transaction has no economic justification, of course, there is a red flag. Multiple cash deposits and then followed by a big wire transfer outside the country. That means terrorist financiers, they are using this account as a funnel account. There is no rational or economic justification for the transactions. These are certain red flags. They are definitely not the exhaustive one. But if you come across this kind of situation, let us be extra vigilant. Now we will talk about the application of money laundering or the money laundering abuse in different sectors. When FATF was first established, the first success came to FATF is that they broke the notion that money laundering only happens in financial sector or cash intensive business. Through several typology publications, FATF proved that money laundering can happen in any sector, not necessarily it is a banking or financial sector. It can happen in any mode, in any channel, and in any kind of business. Now over to Mr. Shivarao, he can put some lights and then I will take what is the role and responsibilities us as professional gatekeepers. Over to Mr. Rao.
Yeah, next slide. Next slide. Sangeeta, next slide.
Okay. I will talk about now what are the responsibilities us as a professional gatekeepers, because this is very important. Countries around the world have putting responsibilities on professionals such as lawyers, accountants, company formation agents, auditors, and other financial intermediaries who have the ability to either block or facilitate the entry of illegitimate money into the financial system. Now the question will rise, what kind of services provided by the professional gatekeepers are prone to money laundering? Let us discuss few of the services which are really vulnerable for us. For example, creating and managing corporate vehicles. If we are doing this, definitely it can be abused by money launderers. Buying or selling property on behalf of our client, performing certain financial transaction like issuing or cashing checks on behalf of our client, making deposits or withdrawals of funds on behalf of our client, providing financial and tax advisors. Those who are tax advisor, be careful. Maybe a criminal is coming to you to hide their dirty money. Providing introduction to financial institutions, setting up and managing charity. So some of the red flags we should take into consideration as a practitioners. Number one, the client is overly secretive, doesn't want to disclose anything, is reluctant to provide or refuses to provide information or documents which is usually required to enable the transaction execution. The client's business represents usually very high capital compared to similar businesses, or the client bring a very complicated ownership structure where it is very difficult to identify who is the ultimate beneficiary. So if you come across this kind of red flags as a professional practitioners, be extra vigilant. Yes.
Yeah.
There are some popular methods like shell companies, front companies, and shelf companies. These are all bogus companies. Some of them have legitimate operation, most of them they don't have. And it is a very, what you call, favorite avenue for money launderers to park their dirty money. They can do it both at a placement stage, at a layering stage, and it can be done also at integration stage. Now we will talk about the international bodies who are the prominent bodies to combat money laundering. The first and foremost is United Nations. They have their own sanctions regime, which is mandatory. The sanctions are comprehensive sanctions. Now I think Iran and North Korea has full sanctions. Mostly these are sanctions against regimes who have severe violation of human rights. The sanctions can be sectoral sanctions. For example, a particular sector, I think in South Africa, there is a sanction against diamond trading, and it can be a sanction against an individual or an individual terrorist or terrorist group. Another international body which is coming in a big way, which is FATF or Financial Action Task Force. Their main purpose is to set standards and to ensure effective implementation of standards. They have 40 recommendations, which we call as a FATF 40 recommendations. If you go to FATF GAFI website, you can download those recommendations, and also they have sector-specific typology reports, like for insurance sector, banking sector, gold and jewelry sectors, real estate sector. If you belong to that particular sector, this will be very useful when you are setting up your anti-money laundering program. Basel Committee for Banking Supervision, their standards or their recommendations are mostly for banking companies or banks or financial services companies, but they can be a very useful reference material and you can download them. There are certain bodies called FATF type regional bodies. Their purpose is to promote the FATF standards and also to assist their own region to implement anti-money laundering policies and procedures. Like we belong to MENA-FATF. I think, I don't know, maybe India belong to APG group. There is another called Egmont Group. It is actually an informal network of financial intelligence units. Their main purpose is to share information and to publish different typologies respective to their own region. If you go to your own country's FIU, you will find a lot of typologies or red flags they have created. You can refer to them when you are creating your risk-based approach for setting up anti-money laundering framework.
Yeah, here in the internet, it's just one line I want to add in the international bodies. Previous slide, as Sangeeta discussed that there are various international bodies monitoring this money laundering as well as the terrorist financing activities. One of the important international bodies, FATF, and India is the member of the FATF. Thereby, India as a country, we need to follow the guidelines set by FATF. In our previous slide, we already shown that there are 40 guidelines were discussed in the FATF document. So one or two examples I will take. The Indian financial institutions or in insurance industry, NBFC industry, whoever is there in the financial products, dealing with the financial products, need to ensure that they are not part of any crime. The crime can be any money laundering or terrorism financing. So the Indian financial industry organizations need to establish anti-money laundering policies, execute, and follow. So we were discussing in the previous slides red flag indicators. I'll give one or two examples. A company, for the practical examples I'm giving, a company is their established company with a financial organization, say for example any bank, say from last 10 years, 15 years, they are doing the business, they are doing a transaction. KYC is a very good. Company is in customer relationship with the bank for many years, absolutely perfect. But suddenly they're getting into a different types of transactions. So, for example, companies importing fashionable clothes from a different countries. Clothes. Suddenly, they started importing a diamonds, and their payments started going 1,000 times. That is a red flag indicator. So, over a period of time, their import payments to any particular country or any total import payments are X number, and they are well established customers. But suddenly their payments gone to 1,000 times. So in a previous year, if they have made total import payments of say 10 crores, 100 crores, suddenly they are making 1,000 crores of import payments. That is one of the red flag indicators. One of the red flag. Yeah, one more example I'm telling. Previously, last year, the total number of transactions, say for example, 1,000 invoices they paid. Suddenly this year they have paid same amount of 10 crores, but they have paid 10,000 invoices. Means splitting the amount into small amounts and paying to various customers, various counterparties. So amount is same, but the number of transactions are going up multifold. This is one of the red flag indicators. So these kind of red flag indicators are discussed in the FATF document, and they have suggested, they have guided the financial industry how to deal those kind of transactions, how to evaluate, how to conclude, how to report to the regulators. Yeah, Sangeeta, over to you.
Thank you. So we have discussed that how to prevent this money laundering or terrorist financing happening in our organization. So what are the minimum statutory obligations we as a consultant, we as a managers, directors of different organizations, whether banking or non-banking? First and foremost, you must identify what kind of money laundering risk your company is facing. Once you identify your money laundering risk, the next step is to create a scope of due diligence measures and implement an appropriate, strong due diligence process. Definitely appoint a compliance officer or anti-money laundering reporting officer, because he is the one who will be responsible to implement your anti-money laundering framework, and he is also a second line of defense. Establish adequate management information system, internal controls, anti-money laundering policies, procedures, and processes to mitigate this kind of risk. Implement a suspicious transaction reporting mechanism, because if you cannot identify suspicious transaction, maybe at a later stage you will be entering into a reputational risk followed by sanctions. Create a mechanism for escalating your suspicious activity reporting to your competent authority. Everywhere in every country we have financial intelligence units and other regulatory authorities. You must have that kind of arrangement. Whenever there is some new regulations, rules by FATF or UN Security Council, if it is applicable to your organization or to your kind of business, please go through it and try to implement. And last and the most important, maintain adequate records, not only when you are onboarding your clients, but all the way the activities conducted by your clients, and also all the records related to money laundering investigation. Now, Mr. Rao, you can talk about a little bit about risk-based approach, then I will take up CDD.
Yeah,
Yes.
sure. Yeah, sure.
Yeah.
So as I discussed in the previous slides, the financial industry has to do all the transactions. Say, for example, I'm taking a banking industry. The banks are required to do the transactions with a risk-based approach. If you see 2 decades back, a customer comes and approaches the bank to make a payment. No questions are asked. Only the questions are asked at the time of opening of a relationship. Now, keeping in mind of this previous incidents and the regulations, all the banks are required to follow the risk-based approach. So they need to assess the customers, they keeping all these channels, geographical risk, product and services risk, and customer related risk. We have a huge matrix in the banks. Based on that risk-based approach only, the customers are allowed to do any kind of a transactions. Here, I will take one practical example to make this slide more interactive. A customer is already established customer with the banks. So at the time of establishment, the banks should onboard the customer only after doing all the due diligence. If the customer is opening an account with a particular, informing that particular is carrying particular business, whether really customer is having that kind of business, is doing the transactions, if the transactions are genuine, the various tools are available with the banking industry today to assess that customer and ensure that it is a risk-free customer, because banks should not be part of any crimes, or any financial industry should not be part of any crime. After ensuring all those customer due diligence, then only customer is onboarded to the banking industry. Even the continuous monitoring will be there. So customer is onboarded to the bank, saying that he is into the cloth business. He is importing the cloths from a particular countries, or he is exporting cloths or raw material to a particular country. Then continuous monitoring will be there. By chance, after a certain period of time, he has approached the bank saying that he is importing a goods from a different country, different goods. Say, for example, he is importing a diamonds. He is importing a diamonds from an African country from a particular customer, from a particular counterparty. Then, and he is approaching the banks to remit the money. So banks, what is the bank's responsibility? Simply, we can take the money, debit the customer account, and credit to the counterparty. No, but we are not allowed to do that. Only we are allowed to facilitate that particular transaction after ensuring that customer due diligence and risk-based approach. So here I'll give a small example and leave this slide. What is a customer due diligence? The financial industry is required to do a due diligence whether really our customer and the counterparty are really in this business, and no anti-social elements are there in this business. So here, the best, what is the tool? One of the internationally accepted tool is used by the financial institutions, whether the counterparties in the different countries are in this business or not. So banks will tie up with the various organizations, get the information, then ensures that yes, the counterparties are in that particular business. They are really doing this business. So the customer approached the bank, so please debit my account 50 crores rupees and credit to the customer. These are the invoice documents, these are the shipping documents are imported, these are the customs clearances. But when we are verifying that genuinity of the counterparty in the country, if that counterparty is not in the diamond business, is in a coffee selling business, it came to through our due diligence, customer due diligence, we cannot allow that customer to do that transaction. Banks are not allowed to facilitate that particular transaction. So for this, banks will have various tools to identify, do that customer due diligence, and if any suspicious transaction comes, based on this risk-based approach and customer due diligence, we are obliged to report to the regulatory agencies. Yeah, over to Sangeeta.
Okay. So CDD is a recommendation 10 in FATF's updated recommendation, which was issued in February 2012. FATF recommends that financial institutions should be required to undertake CDD measures when establishing business relationship, then carrying out occasional transactions under certain circumstances, if there is a suspicion of money laundering or terrorist financing, and the financial institution has doubt about the veracity or adequacy of previously obtained customer identification data. So a sound customer due diligence program must have these elements. What are these elements? Client identification or customer identification. So full identification of customer as business entities, including their source of funds and wealth as and when appropriate. The institution must ensure that there is a process in place to update and maintain current client information. And based on the client information, as an institution, whether you are banking or non-banking, but you have anti-money laundering in the anti-money laundering net, develop a customer activity profile. What kind of customer, what kind of business he is doing, and what kind of business he is going to do through this account. And based on all this information, decide whether you accept this customer or whether you reject. Please refer to the rules and regulations of your country, your anti-money laundering policy procedure, and also your risk manual and risk appetite of your organization. So the next is rate your customer, whether your customer comes under high risk, medium risk, or low risk category. This is not an easy process. The reason being, numerous factors should be considered when determining risk. For example, what kind of client you have, what kind of products and services they're asking for, what are the transactional activities they previously had, if you have there any history of it, and from which geographic locations your customers are coming from, because this is very important. If your customers are coming from a high risk jurisdiction, then definitely you have to be extra vigilant. Of course, based on the risk rating, that high risk, medium risk, and low risk, you have to make a plan for monitoring. High risk client or very high risk customers should be monitored absolutely continuously. Medium risk customers, if there is any change in pattern of their transaction or activity profile, start monitoring. For low risk account and customers, as in bank, there is an account called CASA, current account savings account, which is normally considered as a low risk account. But if any abnormal activity, if you see, start monitoring. I'm just giving you an example. Suppose you have a student account. Normally student accounts are considered as a very low risk account. But all of a sudden, if you start seeing that this student account is getting a lot of international money transfer, money from different countries are coming to that student account. So there is definitely a red flag. This student account will never stay as a low risk. Again, you have to redefine the risk and put that particular account in a high risk. Of course, investigation, whenever you see any suspicion, start investigation immediately. Don't wait for anything. And last and the most important thing is adequate documentation. This documentation will save you not only to onboard undesirable people, also to raise any investigation. So, Mr. Shivarao, you can quickly go through that, what normally we do when we onboard a customer KYC. Hello?
Yes. Yes.
Yeah.
So, the customer due diligence for individuals, I think this younger generation may not be knowing that what exactly happening 20 years, 2 decades back. If anybody knows the banking industry, seniors or chairmen, if 2 decades back, if somebody wants to open a banking relationship with a bank, what is required? One of our known person who is having a account with the bank should simply sign recommending that banking relationship. I opened the bank account around 30 years back. That time, I found my known person who is having already account with the bank. Simply, if he sign one postcard kind of document will be there. In that, the recommended he need to sign and he need to put his account number. That's all. Your account will get open. But now that is a customer due diligence 2 decades back or 3 decades back in the banking industry. Now the customer due diligence banks are strict based on the risk approach. Risk-based approach, banks are doing the customer due diligence. So to do the customer due diligence, what kind of documents are required? There are various documents. There are various kind of documents that are required by the bank. Sorry. Like personal information documents, it can be registration certificates in case of a company, or in case of a person means either any address proof documents like other cards or any valid address proof documents. If it is a company, any registration certificate, PAN numbers, various kind of documents are available to show that company is into the actually is doing that business. Even after obtaining the documents, banks should verify through their own tools whether really those submitted documents are genuine or not. Say for example, if customer submitted that I am holding a company with XYZ name, this is the registration certificate, and this is my board of directors resolution, articles of association. I am into diamonds business. I am dealing with Africa. He will submit all kind of documents, but whether that is a genuine or not, simply the banks should not rely on the documents whatever customer is submitting. Say for example, in individual case, he is submitting a Aadhaar card as a address proof. Simply banks cannot depend on those documents. There are ways and means that banks should cross verify whether those documents accepted from the customer are genuine or not. I'll leave 2 examples here. For example, customer submitted that he is having a company and registration number. There is a ways and means for the bank to check that company ID through e-government services or any other verification. You can go to the corporate website, Ministry of MCA website. Then by querying that registration certificate, whatever he is entering, he is given. By querying that, you can know whether really with that number this company is existed or some other company existed. Tomorrow, the banks cannot simply complain that no, the customer has given the documents. Based on that, I opened the relationship. I am doing the transaction. No, it is a primary obligation for the banks to cross verify the documents submitted by the customer. Then, in case of in the entity, if any foreign company is having a stake, then the banks are required to obtain the copy of the registration. Then there are ways and means to check whether really that company is existed in the abroad or not. There are various tools available for the banks today, and after verifying that only, the banks will onboard the customer and continuously will monitor. So these are the various what you call various areas of the customer due diligence in the practical terms. Yeah.
Okay.
Sangeeta, over to you.
I would like to add one point. When it comes to residential address, if you see many customers are using the same residential address and they are no way related to each other, please do additional investigation. There might be a chance of terrorist financing. So as he said that different documents are required for CDT process, and of course independent verification through e-government channel or through your company's portal. Now I will talk a little bit about charities and non-profit organization. As you know that they are very risky business. If you get any client or customer as a charity, do an extra investigation, take their license copy, do sanction screening of all those who are behind the charities and non-profit organization. And also, this kind of customers must be approved by your MLRO, and also please refer to your anti-money laundering policy whether this kind of customers are acceptable by your organization or not. And also, as we said before, inquire through e-governance channel that the documents which they are bringing, whether they are proper documents or right documents or a forged documents. One tricky area is customer due diligence for companies under registration. Why it is tricky? Because you don't get any government documents, because most of the cases what happened, they don't have license, they don't have what we call here company registration document. Still you have to do minimum due diligence. For example, obtain their draft memorandum of association, even if it is not approved or stamped by the local authorities. Please prepare a special KYC form, because this is a completely different set of customers with a different kind of risk profile. Identify who are the owners behind this kind of company, especially do a sanction screening and SPEP screening for them. Identify what is the objective of the company, and also identify what kind of activities they are going to do in your account. Now, Mr. Sivaro, if you can add something on real beneficiary, identification of real beneficiary.
Yeah. This is you already covered.
Okay, so let us go see. Normally, banks have a very robust KYC form, but those who are practicing cost accountant, you can create a kind of a form like this, and I will also share some forms KYC for individual customer or corporate customers. So maybe you can use this kind of forms, or if you have a better one, definitely use it. But these are the minimum information you should have. Now I'm going to discuss something which is called politically exposed persons. These politically exposed persons are considered a very high risk client. It is not that all political leaders are bad. Actually, they have considerable fund at their disposal. For that reason, they are considered as high risk, because there are chances of illegal transfer of money. So who are these politically exposed persons? So these politically exposed persons are individuals who are or have been entrusted with prominent public functions, either by the foreign country or by your local jurisdiction. So who comes under this PAPE? You can go to the FATF definition of PAPE. Even you can refer to your own country's regulations. So these PAPEs can be the head of state, the president of India, the prime minister of India. PAPEs are all the ministers of the central government or the state government. PAPEs can be the head of public sector undertakings. They can be senior military officials. PAPEs can be ambassador or first visa officer of your local embassy or consulate. PAPEs can be also the judges of Supreme Court, High Court, Session Courts. So you can imagine there is a huge number of people who will come under PAPE. PAPE also includes the close family members, normally first degree family members of PAPEs are also a PAPE, and also close known associates are also comes under the definition of PAPE. Always keep it in mind one thing: when once a person is a PAPE, he is always a PAPE. So you must have a separate due diligence procedures for the PAPE. The PAPE KYC must be approved by your MLRO, and a senior official of your organization, preferably the board of directors or the zonal manager, should approve the PAPE. And also, as I say, I'm talking about non-banking organizations. If you have your AML policy, go back to your policy and check that whether you can accept this kind of client as your customer. So this is just a format of PAPE KYC. Those who are cost accountant practicing, they can refer to this kind of KYC form. So Mr. Sivaro, if you can talk a little bit of customer due diligence monitoring. Already you have spoken. Maybe you can add some colors here.
So, yeah, Sangeeta, thank you. So already we discussed some of these points. If you see that changes in the client's strategy or the business profile. So initially the client has given second point in the second row, third item, changes in the client's strategy or the business profile. So the bank's client is having established a client doing the financial activities with the bank from last 1 decade, 2 decade, going smooth, but suddenly there is a huge change in the client's business strategy or the business profile. Then the financial industry banks cannot say that, okay, this customer is having a long relationship with the bank from 2 decades. Nothing is required to do. No, not accepted. So when there is a change in the client's strategy or business profile, again, the banks are required to do their own due diligence, normal due diligence, enhanced due diligence, additional due diligence as per the guidelines set by the FATF 40 recommendations, as well as our Reserve Bank of India. And after getting a genuine satisfaction about the genuinity of the transactions, then only banks can facilitate the transactions. Either here I'm using a banks because I'm working in a banks, but the financial industry covers non-banking financial companies, the commercial banks, as well as insurance companies. So for insurance companies, IRDA defines the rules and regulations. For a banking industry, Reserve Bank of India defines the rules. We have various regulators for each kind of industry. So by following the guidelines prescribed by the regulators, the particular entity who is operating under the guidelines need to ensure that customer due diligence as per the given guidelines. Yeah, Sangeeta, over to you.
Okay. Now I will talk about enhanced due diligence. Enhanced due diligence means additional information, or you have to take additional effort to collect more information about your customers. For whom enhanced due diligence is required? If your customer is a politically PEP or politically exposed person, religious association, charities. Nowadays, travel agencies have become very risky because money launderers love this kind of channels. Money exchanges always there. Cash intensive businesses like hotels, restaurants, provision stores, all comes under high risk business. Gold dealers, precious gem dealers, card dealers, or any luxury product dealers, all come under luxury goods traders. For them also you have to do enhanced due diligence. Gambling industry and also cryptocurrency industry or ecosystem. Weapon dealers, of course, they will definitely come under the enhanced due diligence scope. So for enhanced due diligence, when it comes to the customer or client, if your client is a non-resident client, they are very risky. Cash intensive business is always risky because this kind of business directly attract money launderers. Third is unusual or excessive complex organization structure with no logical reason. If your customer or client is coming from or a resident of a high-risk country or country subject to sanctions or embargoes, you have to do additional investigation. Now the question will come, how I will do it? There are different documents, publications available. You can refer to FATF guidelines or FATF site. If you go to their site, you can find they have a list of jurisdictions, some under blacklist, like Iran and I think North Korea is under blacklist, so there is no business to be done with them. Some countries are under grey list. They have strategic deficiency, but not human right violations. If your customer is coming from a grey list country, be extra vigilant. So you can refer to FATF listing, but this listing change continuously, so you have to continuously look at it. You can refer to Basel Committee for Banking Supervision. They have also jurisdiction risk categories. And third one is Transparency International's Corruption Perception Index, where every year they publish a score from most corrupted to least corrupted countries. So you can use that material as well. Also, enhanced due diligence to be taken when your shareholders or directors of a company is a politically exposed persons or a family member of a PEP, also close associate of PEPs. So you have to collect far more information to satisfy yourself that yes, now we can onboard this client. And also non-face-to-face business or relationship transactions. We have seen that during the COVID-19 time, many financial institutions totally moved to non-face-to-face or remote onboarding. If you are introducing this service, you must have adequate controls, and there are certain categories of customers or clients they should not be encouraged to onboard remotely. For example, politically exposed persons or customers who are coming from a very high risk country. So when there is a suspicious transactions, it is time for us to report. So suspicious transactions, for example, transactions which have no apparent purpose, no logic. A client refuses to provide appropriate information, unusual transactions without any profitable motive, unnecessary routing of funds, especially it happens a lot in trade finance, and complicated organization structure without any reason, and it is so difficult to identify who are the ultimate beneficiary behind that kind of structure. I will just give you an example later on how a dirty organization structure looks like. And also I will share with you a very funny case. It is not a funny actually, that how an organization structure can be dirty. I was actually doing an audit or compliance review of a DNFBP. I saw one client, they have already onboarded, and certain things struck my mind. I asked them, can you take out the file, please? When they gave me the file, I saw their organization structure. How their organization structure looks like: 60% of the company shares are held by 2 individuals, and 40% are held by 2 charities and one club equally. So 60% is okay because they did all the analysis and drilled down that to identify ultimate beneficiary. I don't know the rules in India. Here is up to 20% you have to identify who are the beneficiaries and do a proper sanction screening. They did everything. Even they took all the documents from charities and club. Then, and what kind of business this company was doing? They were actually a general trading company doing business in fruit juice and non-alcoholic beverages. Then I asked them what this charities has to do with juice business. They said, we don't know. I said, there should be a suspicion, isn't it? And how these people are linked together, because charity's job is to do charity. What they have, kya uske saath juice business ka lena dena? Then I said, can you do some additional investigation? Then they started doing the investigation. So the key takeaway from this case is that when you are doing onboarding client or doing analysis of the client, just don't work with your eyes, work with your mind as well. So let's go to the when you should report suspicious transaction. Mr. Rao, will you take this or I will take this?
Yeah, you can take it. Continue. No issue.
Okay. When there is suspicion, you must report this to your MLRO, and you must have an escalation matrix to report. First, as an operating person, if you are working as an MLRO, that is different. You must report that what kind of activity you think it is suspicious. For example, 5 areas you must consider: who is conducting the suspicious transaction, what instruments they are using, when did it happen, where did the suspicious transaction take place, and the most important is why do you think that this transaction or activity is suspicious. Collect enough information and give it to your MLRO, and always keep it in mind when you are reporting suspicious transaction to your MLRO. It is absolutely confidential information. Your next seat friend should not know. Nobody should know. Even your managers, your directors should not know. So there will be only a direct channel between you and your MLRO or compliance manager. So collect enough information so that your MLRO can do enough investigation, and if he feel that it needs to be escalated to the FIU, so that he can do that. Why I'm emphasizing on collecting enough information? Because when FIU will get your suspicious transaction report, they will start investigation, but they don't have first-hand knowledge what you have for your organization. So your information, your documentation will help them to create the case and to start investigating. So this is an anti-money laundering flowchart. I will not go through it. Last but not the least, never tip off to your client that you are doing an investigation against them. Tipping off is actually an offense. You can lose your job or you can get civil money penalty. So that's, before we conclude, I will show you this kind of organization structure can be considered as a complicated organization structure. If you come across this kind of structure, please drill down and definitely create a red flag for it. So that's all for today's discussion from my side. Mr. Shivara, if you can add anything, that will be fantastic.
Yeah. Thank you, Sangeeta. Yeah. The one last slide, what we discussed is the suspicious transactions. In this and last 1 hour, we are discussing various regulations, various rules, various international organizations, and there are set of procedure documents, customer due diligence, and continuous monitoring, all those things. But when it is coming to suspicious transactions reporting, always we need to use some kind of a common sense. Means it's not based on the completely documents, anything out of the set of the rules also. If something suspicious comes, that organizations should report to the concerned regulators. So Sangeeta has explained that the particular employee who is handling that particular transaction need to report that suspicious transactions to MLRO. Then the compliance department responsibility to further evaluate those kind of transactions and take next level calls. So while reporting that, while doing the transactions, the common sense actually prevails most, because that the persons who are dealing these kind of transactions, always they know the rules better than us. They know the rules better than us. So they will always try to create a documents can fit within our regulations, rules, all those policies. So one common sense will be required while doing all this kind of a transaction. With this, I'm concluding and handing over back to our chairman, sir.
Thank you. Thank you, our eminent speakers, for such a nice and elaborate presentation that we have today. We have received many questions from the participants. So I'm just, due to paucity of time, I'm throwing some questions to our speakers. What is trade-based money laundering?
Yeah, I will take this question.
Sure.
What is trade-based money laundering? Actually, very, very valid question. I was waiting for this. In the movies, if you see in a Bollywood movies, how the money launders will happen. A villain carries one truck of money and will take old note, $100 note. They will cut into two pieces. One will be with the destinated place, and that hero will take that, or villain will take that piece of note and hand over, take the truck of the money. That's what we have seen in the money laundering in a Bollywood movies. Actually, it will not happen. The money laundering will happen through trade. How it will happen? By over-invoicing, or by doing the transactions which are actually not happening. So, for example, a person can do a money laundering, can send the money hundreds of crores simply by buying one big, what you call Picasso picture, which is auctioned in the London officially. Everything looks like official. He say that I purchased a nice photo, a nice painting from the famous art museum from a foreign country. I am sending 200 crores to that one A4 size painting. He can do that. The another example, I am importing diamonds worth of 100 crores. I am making the payment, but actually, who knows that? Because diamond industry is such a niche segment, knowledge-based segment. Nobody knows the real value of the diamonds. It goes once the size, color, clarity, it goes up. It depends upon the demand. So there are through banking channel, through trade finance, the money laundering will happen. Yeah.
Well, I would like to add one point that if you see that a customer is bringing diamond through a country which is not in the diamond trading pipeline, or if they are keep on routing the shipment or the transaction, then there is a chance of money laundering. And also, as you say, that price manipulation is very much in trade finance, over invoicing, under invoicing, ghost invoicing, all these are money laundering techniques. Yes, let's go to the next point, please.
Yes, thank you. How to tap opportunities by institute in this anti-money laundering drive? Any role in PMLA?
I think for the Indian thing, maybe Mr. Rao is the right person or any committee member. But yes, as a professional, there is a great opportunity. You can act as a compliance manager, and definitely you can act as an auditor, which is actually, I don't know what about India, but in Gulf countries, there is a really great opportunity to act as an anti-money laundering compliance reviewer. Yes, the scope is increasing, the professional opportunity is definitely increasing. Whenever there is a crime and criminal, always there will be opportunity for us.
Yeah, just adding to that Sangeeta's point, since India is a part of FATF members, so we need India as a country whole, we need to follow all the anti-money laundering rules. In a financial industry, there is huge requirement of anti-money laundering professionals, because the crores of transactions are getting churned in the Indian banking industry, either in the insurance industry or banking industry, and we are required to filter, evaluate, analysis all those kind of transactions. Therefore, from last 5 to 10 years, there is a tremendous opportunities in the anti-money laundering areas in a financial industry for the persons who are aspiring to be into this particular area. Yeah.
And also, sir, has any role for our CMAs for due diligence?
Yes, of course, there is a role, because you can act as a compliance reviewer, especially nowadays. You know, the opportunity is growing, not just the banking industry, or any kind of industry is now coming under money laundering net. For example, real estate businesses nowadays, they must have a robust anti-money laundering program. In UAE and Qatar, it is a must. Even gold, diamond, jewelry, real estate sector, then brokerage firms, investment companies, everywhere you can. I don't know whether I have missed any particular sector. All comes under money laundering net. So there is definitely a great opportunity to do due diligence and also to do anti-money laundering compliance review. Yes. Mr. Rao, if you would like to add anything?
Yeah, you're covered.
Okay, sir. How PMLA officers are investigating the documents provided by any person, and what are the basis to assess the documents?
See, I'm taking this question. Suppose if you are an MLRO and if you are receiving a kind of suspicious transaction report, there are a lot of documents you have to refer to. First is how you have onboarded this client, what was your initial expectation of the kind of activities or transactions. You start do a sanction screening, transaction screening, take out the past history or the, let's say, past 1 year's transaction profile, and then only after seeing this you have to make decision that yes, this is a suspicious activity. Please keep it in mind, one unusual transaction doesn't mean that the client is a terrorist or a money launderer. You have to follow a pattern, and when you are satisfied with the pattern, yes, this is a question, this client has a questionable character, then only you raise your suspicious transaction report to FIU. Always keep it in mind, don't be afraid, because you will get civil immunity. When you are raising, customer cannot come and raise a case against you. Yes, next question. I think I have covered, right? Okay, thank you.
What are the international sanctions?
There is I'm taking this question, maybe Mr. Rao can add it. One is sanctions by United Nations. These sanctions are mandatory. All sanctions are actually mandatory. There are sanctions of three types. Comprehensive sanction. This is applicable for the country like now Iran and North Korea is suffering. Comprehensive sanction means the country has severe human rights violation, and there can be sanctions against a particular sector. Even sanctions can be for individuals, like individual terrorists, drug traffickers, money launderers, or criminals, known criminals, or for organized criminal body. Yes, all come under sanctions. So we can say comprehensive sanctions, sectoral sanctions, and individual sanctions. Plus there are other sanction authorities like OFAC, Office of Foreign Asset of Control of United States of America, European Union. They have their own sanction regimes. Plus every country, they have their own sanction regimes and list of sanctions entities and persons. I think I've covered, right? Okay, thank you.
Which government authorities are responsible for investing and prosecuting money laundering criminal cases?
I can tell you, because I think it is something very uniform. Financial Investigation Unit, every country they have. Some they call as Financial Information Unit, and some they call as Financial Investigation Unit. They are the first reference point for any investigation. And when they find that really a prosecution is needed, then they refer to other governmental agencies. This is normally the framework.
Yeah.
And also they publish the list of sanction entities. You keep on getting the list from FIU.
Yeah, every FATF member country has to form a separate investigating regulatory agency to monitor this anti-money laundering rules or terrorism financing rules. In India, the agency name is called FIU, Financial Investigation Unit, which works under the Ministry of Home Affairs. Yeah.
Thank you. So with this, we have come to the close of our question answer part today. And we will also upload your presentations, sir and madam, both of your presentation in our BFSI portal. And I will also request our participants, if they have any questions, they can mail at bfsi@icmi.in, and we will send it to our speakers for their query resolution. Okay, so thank you so much, sir. Thank you so much, madam. So now I would request CMA Shubhro Michael Gomes, sir. He is the director and HOD of our BFSI board, for the vote of thanks.
Thank you, Indrakshi. A very good evening to everybody.
Very good.
And what to say? The speakers have said all, and perhaps engrossed each and every of the participants. And sir and madam, although I had been watching all through, but not being the lone audience, it had struck 500 plus, 511. And they had been there. And that speaks about everything. And so my vote of thanks perhaps is mere formal. They have been touched and they have been all through. And let me now put the vote of thanks in formal order. Madam CMA Sangeeta Basu Phalabi, what not to say? It had been a dual combination, and I should now take his name also. CMA Shivarao, sir and madam, it was pleasant, too much pleasant to hear from you all. And the PowerPoints which had been presented with, which had been meticulously explained, so that remains. And I suppose all the participants would have immensely benefited. And now the concept of money laundering and anti-money laundering is very much clear to them. Thank you very much. I do take this opportunity to say few words, not on the topic, but then our guests who have made this evening, the start of this show, a pleasant one. To mention the first, it has been the CMA Shankar P. Paniker, the chairman SIRC. Further to say, our chairman CMA Chittaranjan Chattopadhyay sir, who within his busy schedule we had seen from the airport also he had joined. And that itself speaks of the commitment which he ignites and initiates. And that has transpired the whole BFSI team who had been contributing. Starting from, I should mention Sri B. Rajkumar, the advisor to this BFSI board, Sri Shamal Ghosh Roy, the consultant to the BFSI board, even for his contribution towards introducing the topic today. And to tell you, the whole BFSI team had been watching all this and been contributing from the background. The additional director, Dibyendu Roy, then Bhavesh has been there, who had been monitoring very closely and trying to get this through. Thanks, Bhavesh. The IT team, who had been giving us support. But today I should also tell you that there had been surprise visitors who had been watching and trying to introduce themselves to help us to continue in our own shows and events. Thank you, Paramita, for joining us. I should also tell you that the IT team, who had been also supported by Sujoy Kundu for live streaming and recording. Thank you, Sujoy. And Indraksha, I have not forgotten you. You deserve a very special one. That's why I'm naming you later. But before that, I should also tell you that in absentia, it has been the president of our institute, CMA Vijayendra Sharma sir, and our vice president, CMA Rajesh Balla sir. They have actually wanted to be here and have extended full support. And to add the last bit, it had been the secretary of our institute, CMA Kaushik Banerjee, who has also been trying to communicate to you, everybody, that these shows are immensely required. Thank you once again. Have a wonderful weekend. Over to you, Indrakshi.
Thank you, sir. So, thank you so much, our eminent speakers, madam, sir. And also thanks to our chairman, sir, our HOD, sir, our BFSI team, our IT support. And also thanks to all our participants also. They have interacted so well, so highly on this Saturday evening.
Sure.
So, thank you. So, have a nice weekend. With this, we are concluding for today. Thank you.